Thank you. Our next guest says investors still expect a trade deal is going to get done. There might be some conditions, though. Doug Flynn, certified financial planner, co-founder of Flynn, Zito Capital Management, is here. You think a trade deal is going to get done? Because, frankly, it sounds like they just keep repeating the same rhetoric. Phase one, we're talking, we're negotiating. Yep. Investors seem to be tuning this out.
They do it because of the back and forth. I think the more important deal is the USMCA Act deal that we're trying to get through. And hopefully, that's a bigger trading partner than China is. And I think President Trump is looking at the fact that 70% of our economy is the consumer, and the consumer isn't feeling the effects of the China trade issues. They are in the corporate world, so that's an issue, but he's banking on the consumer coming through as they continually have.
You're talking about those December 15th tariffs. Edward just mentioned that. That's toys, that's electronics, that goes into effect. We're less than a month away from that December 15th deadline. You think, going back to China real quick, that the president's going to blink?
No, I don't think he is. I think that he's going to...
You think he's going to put those tariffs in place?
I think he'll use that as a negotiating tactic to kind of keep moving the thing down the path. It hasn't really affected the consumer on a daily basis, so they're not feeling it. They're in the best possible position they've been in from an income standpoint, from a debt standpoint. So they're absorbing whatever little increases that there have been, and the companies have absorbed a lot of it as well, and that's the big part.
We've been hearing from the retail names this week. I was going to ask you about that because, Walmart had a great quarter, and a lot of the concern with them was it was going to be a China story, and it wasn't. We are going to be hearing from Target before the bell, and we're going to be hearing from Lowe's. Target, first to them. That's been a pretty good retail story this year.
It has. I mean, the stock is up ridiculous year to date, so it's kind of one you don't want to chase. But same year-over-year same-store sales is what you're looking at there. You want to see a number as high into the threes as possible. That's kind of what we're expecting. But they're doing a lot better with the turnaround over there, so that looks pretty good.
Okay, Lowe's might be a different story. We had Home Depot earlier this week, and that was not a good quarterly report. That hurt the Dow. It's one side you've got home improvement, not so great. Fun stuff at Walmart, pretty good.
Yeah, I mean, if you look at the Dow, it goes by price of the stock, so that has a bigger impact by Home Depot being in it. But Lowe's is in a little bit of a better position than Home Depot is. I don't really like this whole sector overall in general, but I do like Lowe's better than Home Depot just because of the new management and the way that things are positioned going forward there.
Okay, we're going to get those numbers. Also, National Retail Federation, I want to go back to that consumer issue that you brought up. They say 79% of Americans are worried that tariffs are going to hurt their holiday shopping. Is that founded or unfounded?
I mean, I don't know that you're going to instantly see a big raise in your, you're not going to not have holiday sales that people are going to come out and buy. I don't know how much it's really going to have a material impact on them. I think that's exactly what the president is banking on while he plays with China to get this through. I don't think most people care whether we're buying their stuff from China or somewhere else.
Ending on a positive note. Big piece in the Journal this morning about the technology sector. Some of these stocks, looking at Amazon, looking at Alphabet, been strong performers for the year. They're saying, look, tech stocks are way outperforming the general market. Technology stocks, even into next year, what do you say?
Yeah, they are. I mean, the technology sector is the highest performing sector, as it continually seems to be. It's up over 40% year to date. It's the kind of thing you really have to be careful in chasing because some of these stocks are up 2 or more times. So you just have to look longer term and say, yeah, technology is where we're going, but it's not going to take over the entire market. We saw that movie before in the late 90s into early 2000s.
I don't know. NASDAQ up year to date, 29%.
Yes, it's high double digits.
Last night.
So we'll probably get double digits again next year, but maybe not as much as we did this year.
Hey, making money. Doug, thank you very much. We appreciate it. Lauren.